Yeah, I'm losing my
Today,
edge.
Pete, we will pause all the inner workings of small exchange to talk about an already created product that is really in the news a lot right now, which is the precious metals product from the small exchange. And I want to talk about managing volatile metals markets, something that is very relevant right now. You've got a silver market that just today alone, Pete, is up over $7,000 notionally. You've got a gold market that just today alone, Pete, is up over $2,000 notionally. When you get to the smaller versions of those products, you still have markets that are up over at least a few $100s to over $1,000. Not a lot of people can withstand that intraday movement. Not to mention a couple of days in a row of that movement, because as you can see here, from the point of view of small precious metals, metals have not stopped for the last call it 2 or 3 weeks here. We saw a lot of new highs sell off, highs sell off, new highs sell off, new highs sell off, and then bang, just like this, as we've talked about time and again, these commodity markets just taking off.
Yeah, and you know what? This is Aussie-esque in terms of just we recouped all the trough so quickly, and look at that, put another almost 16, 17%, more than that, probably 18% into this move, unrelenting. So, if you want that precious metals exposure, yesterday you definitely picked the wrong one when you were long gold versus silver. Today, again, another 6.5% in silver, 1% in gold. So, it's a challenge. Now here, this is definitely playing this from the bullish side, gave you a lot of good movement and a lot of good profits. Trading the other ones is just a challenge. So today, a big move, as you mentioned, $200 is a big move at an underlying that has a margin sitting around $180. So, but manageable. Yeah, I think in a world where we're seeing moves like this, 10%, 12%, 14%, and I can withstand $200 on any particular day, that creates a very interesting environment for me to trade. If you want to, I look at this and it says two things. One, I can trade momentum. I'm not a momentum trader. My business partner was. It was amazing. We had completely different trading styles. This is a great momentum trade, but it's also a great reversion trade if you're willing to look for small slices. And that's something that you're not served up in a lot of other products.
Yeah, and I want to talk about managing metals markets here today. A lot of people would rather talk about initiating metals trades. A lot of people coming to this is the scenario, Pete, that you and I we see all the time, which is we survey all these different asset classes daily because we don't dive into, other people dive into single stocks and all these different ETFs and all these different stock products. And that's kind of their playground. Our playground is a couple of stock futures and then all these different asset classes. So we've been knowing what metals have been doing for the last several months. Forever, we're monitoring these markets daily. But it's this scenario where people are coming over from the stock world and they're saying, wow, something's going on in silver, something's going on in gold. They get a little bit of the context of, new highs. And even if they get that next point of context being, silver's outperforming gold, that's not enough context a lot of times to make a well-rounded decision in these markets, because these are big markets. They're commodity markets that can really, really rip. I mean, people talk about stock rallies, a stock market rally of more than 2% on a daily basis is like, wow, you don't usually see this in stocks, and you don't. In commodity markets like gold and silver, it is very normal to see a 4, 5, 6, 7% rally in a day in these markets. So you have to get a lot of this context on it. And that's why it's maybe not the coolest thing to talk about managing volatile metals trades, but man, is it going to save your behind? Because if say you saw this news story of metals yesterday or the day before, and you traded SI or SIL, the mini version of that, or GC or MGC, the micro version of gold, I mean, you're out thousands of dollars no matter what product you chose to sell just because it was in the news. And that's something that I'm glad that people are getting their eyes on different asset classes, but it's bittersweet because everybody wants to get there and then just say, oh, well, it's expensive. It's an outlier move. So I just need to get short immediately. You need
Right.
some more context in that, right?
You absolutely do. And you need to, this is a classic example of where we can see the propensity for these different products. They're all precious metals: gold, silver, platinum. There's not overridingly precious metals used as a store of value. Sure, they all have industrial uses. Don't go down that road. It's not going to get you anything of interest here. But the propensity for movement is something that and you mentioned this commodities piece, along with things like crude, along with things like grains, depending on the time. But this is the type of movement you're looking for, which is very different than what you mentioned. What do we consider an extreme move in equities? And what do we look for an interesting opportunity here? So I think you're spot on with the idea of, okay, how do we truly look for, rather than just saying, well, it's expensive and I want to short it, and then which one am I picking? Now, on a back and forth basis, if you look at this, gold was definitely a much better back and forth pick. But I only know that because I'm looking backwards.
Exactly.
20 trading days. I don't know what that's going to look like 20 days in the future. And that's what makes that selection dilemma very real.
Yeah, it reminds me a lot of the crude oil move to the downside earlier this year, where it's like crude oil is getting near zero and then it finally breaks zero and everyone jumps over to that world without the context of what crude can do, what if you're trading crude oil futures, what that term structure can mean for negative values. And you just jump over there and without getting a little bit extra, it's just a little bit extra context to create a fully formed trade that you don't have to manage by saying, you said it earlier today, I don't want to get here, sell the big /SI. And because I didn't take an extra couple minutes to get that context, this trade isn't going away in the next 10 minutes. So sit here with us for 10 minutes, get this context, because the last thing you want to do is rush to it. And then, like you talked about, Pete, sell 20s in silver, the big contract, and then have to buy back another new high thousands of dollars later, just 10, 20 minutes later. It's really not what you want. When you see some of this context, this is why you and I have been holding off a little bit on the short silver side, because you look at silver's performance for the last year, you look at it for the last couple of years, and you're like, wow, this market, new highs. This is crazy, unseen, unheard of. I mean, honestly, Pete, we are back to still very undervalued in the precious metals world, just starting to play catch up with gold, a silver market that's been as high as almost $50, not even halfway back to those highs of 2011. Take all of this into account and think about the fact that I don't need to rush to sell 22s or 23s in silver. It's probably going to stay. It's going to stay active for a while, and that's not even the tip of the iceberg, man.
No, and that's and that's the point, is that you mentioned with the amount. And I love this context because of this chart, because it's like, oh, this is screaming, I'm buying silver, selling gold. You know what? But when you remove the gold piece and you look at the silvers, how can I buy 14% up in 3 days? And I agree with you. I wouldn't be a buyer 14% up in 3 days. I talked about the idea that we could see another chunk higher tonight in thinner conditions in silver. I'm not betting the farm on that we're going to mark that up. But I think context around, is this $23 in silver rich? Basis that there's a lot more to be done. So it becomes a little bit of a challenging horse here, because you're either compelled to take on something, as you mentioned with silver, that is uncomfortable for any size trader. These $7,000 moves, if you're only using one chip at a time, I would much rather have the ability to. We all have a maximum clip size, and that's this is as much as I want in any single product and exposure. Running up to that point is never a good sign, because it usually means that everything you have on is wrong. And now scaling in and out is a situation where when you do scale in, if you get that last piece you want, every one you had done previously is wrong. Well, that's fine because your goal is to get better trade location. But in this instance here, if you're scaling to that maximum point, you're probably at an uncomfortable level. So with a smaller product like we're talking about, though, you don't have to be compelled to get to that so quickly. You can really work your way through that opportunity.
Yeah, because you look at some of this context here, Pete, and you see that in this gold silver relationship over the last, this is 3 decades of information, we are just getting back to the high side of a normal range for the last 3 decades, which is to say that silver is just actually getting back in line
Right.
with being cheap relative to gold. It's not even like silver is expensive relative to gold. It's still, by and large, if you take this blip, this 3 month blip out of this chart,
Right.
you've got a price here in silver that's historically very cheap to gold. So this is not a scenario where you use the phrase throw caution to the wind and jump in to this silver market and just immediately get short. You got to take a little bit of caution back from the wind here because this is it's just too large. You look at /SIL. This is the notional chart of that market. And Pete, in 2020 alone, you've got a low to high move of $10,000. Yesterday alone, you've got a move of over $1,000, almost 2 grand. And this is the smaller version
Right.
of this product here. It's really something that if you took this out of it yesterday and you said, wow, this price at $20 or $21 in silver, that's expensive. I need to jump on this now. This trade is only here for a limited time. You'd be, it's just, there's no rush for a lot of these things. The last thing I want to do is rush to a big futures market.
Right.
And I mean, if you do want to get into the metals game here, this is something that's just a lot more comfortable. Now, would you be out in the same time frame, a couple $100? Absolutely.
Sure.
This market is at an extreme and it's moving like crazy. But Pete, I can withstand $200 today a lot better than $8,000.
And that's it. And you know what? It's not that our directional choice is wrong. It's what we're comfortable with in terms of, being able to stay mechanical. Now, because it's only a $200 move, and I'm used to sweating $1,500 because I had to strap on those institutionally sized futures. So I'm just going to give it all that rope because that's the pain I'm used to taking. That's not what these are built for. They're built for that ongoing back and forth, that piece of engagement that is simple and manageable. So you know what? Smaller size products, sure, the losses are less. You be mindful that you're looking for the entire game has shrunk in a good way. And by maintaining that disciplined nature with those smaller slices, you can always scale up those smaller slices.
Well,
you can't do the reverse.
Exactly.
So don't get complacent that, well, I'm only out $200 on this. Usually I'd be out $2,000 on this trade. So that means I've got more rope to go. You don't.
Exactly.
It gives you a tool to start building discipline, mechanics, and the strategies that fit for you. And you know what? In a place where I would say, the hardest thing for a trader, time's vicious. What I mean by that is oftentimes time consumes your capital before you really get vested in understanding or finding an effective strategy, trading a product. Anything you can do to give yourself more time in a product is critically important for success.
Well, exactly. I would much rather say I really wanted to dump 2 grand in selling metals the last month until now. I'd much rather do it selling one contract here, and one contract
Right.
here than selling one contract earlier today and being out all of that money in a matter of a couple hours. And finally, the final point here is also on days where gold is outperforming silver's outperforming gold, but both of them are appreciably higher. Gold through its historic highs for the last 3 decades, silver through its highs for the last decade. Also taking that decision out, getting both gold and silver with this SPRE trade, smaller exposure in both. This is the way for me to manage volatile metals.